And we're live. Hello, everyone. Good afternoon. I have some new stuff going on today with some new technology. Whoa, crazy. I don't know if it's going to work 100%, but I'm going to give it a good shot. Anyone feel welcome to let me know if it's working well or working not. If it's not working, unfortunately, I probably have some shortcomings with my hardware availability, and I'll likely have to resort to webcams or upgrade some hardware, which is pretty cool. So suffice it to say, I'm going to figure something out. I'm going to take this to the next level, and we're going to have a good time doing it. I'm happy to see everyone here. This is quite an interesting experience, quite different than what I'm used to. Obviously, we've been doing this only a short period of time, but this is a next step, a nice step to take in our journey to understanding what the hell is going on and where the hell everything's going. Looking at the live feed, we got Lewis is here, Caterpie's here, everyone's here. I hope more people join and they get a sense of this new live stream presentation, which is very common on YouTube, but I'm trying to get my feet wet. There's going to be a couple of hiccups as we get the ball rolling. Anyway, welcome everyone. I know the topic on everyone's mind. We discussed it yesterday in a Twitter poll. It's a topic that should be on everyone's mind, considering all the craziness going on with the global economy, domestic economy, and frankly, it's not craziness that's going on in the crypto market. It is exciting because there's so much potential, especially as compared to legacy equity markets. There's so much unknowns in the legacy system. And the crypto system is giving us a new paradigm to consider. And frankly, in many regards, superior implementation to what has been built over the last 100 years in the legacy system. Superior? That's a crazy thought. And frankly, you love it. I love it. We all love it. And that's why we're here today. If, Joe says, if was Android, you wouldn't have that. If was Android, but as in maybe my imagery, that imagery is actually off of the Play Store. I'm an Android developer, been so for the last 11 years, and that is an image that I had. This is a shoot from the hip YouTube channel. I think it's going to gain some traction, and then I'm going to get some new imagery, new hardware, and you know where it all heads. Anyway, so the topic that was of interest for to be discussed, as stated on Twitter yesterday, is what to do when everything goes to the moon. And this is the same. So that phrase obviously is very uh, common in the crypto space, and that's not necessarily. It's a viral phrase, a bit of an amateur overtone to it. And what's most important is that that existed in the legacy space as well. What happens when a penny stock turns into a mid cap, turns into a large cap? What happens when a new real estate development has extreme demand? The price appreciates. Uh, you're not going to have it with bonds and treasuries. It's really just equities. Not going to have it with commodities nor precious metals. So, in many regards, this explosive action across the board, such a wide range of assets, is so centric to the crypto space. This doesn't really happen in the legacy space. And this is really just because so many projects across the crypto space have such a profound potential to disrupt the status quo. That's crazy. These aren't just projects. These aren't just what it was in 2017 ICOs. These are technologies and, frankly, companies in many regards. Not companies in the sense of traditional revenue. It is a new paradigm of what it means to be a project slash a company, to make a product, but the product doesn't generate revenue, but the participation in the product's functionality is no doubt a revenue for the developers of the product as well as the contributors to the project. Fascinating. Anyway, whoa, I blow my mind sometimes. Anyway, so let's talk about what to do when craziness happens. We have to be diversified, and that's the whole point of what I've been discussing over many video feeds. Um, when there is yield, when there are gains, we need to distribute those gains across obviously safe assets as well as increasingly risky assets that have the potential to appreciate also. And that's all about portfolio balance. The vast majority of one's portfolio truly needs to be in safe assets. And this is gold, silver, you could real estate, albeit real estate has a lot of unknowns because it's highly susceptible to the insanity that's going on in the legacy system. What does that mean? That means real estate is greater risk than gold and silver, albeit gold and silver are highly affected by the craziness as well. The geopolitical relationship between countries, the location of mines in less stable countries and regions. A U.S. company has a mine that's in a random African nation, and that random African nation is going through hard times, craziness, and they decide to take government control over the property. All of a sudden, that asset of the U.S. company is not in a good position. Um, and this means there's increased risk associated with gold and silver miners and gold and silver itself, gold and silver streamers as well. So, is there really a safe haven? I have to think about that for a second. I'm pausing. I mean, clearly, a safe haven is not the dollar. Clearly, a safe haven is not necessarily gold and silver. I guess really what it comes down to is what is a better safe haven. Anyway, let me look at the comments for a second. Lewis says, how many projects is diversified? This comes down to you can't be all in and you can't spread too thin. This needs to be a subjective assessment. We need to understand this for ourselves. No one could tell you. Obviously, portfolio managers could tell you, but then they're in control and you're not in control. Um, that may be the appropriate choice for many persons. For myself, I like to make these assessments, these analyses, these conclusions on my own. And then I don't have to rely on a third party for information, decisions, and choices. There's no way to say a particular number, and ultimately it really is gut instinct. What you really need to do is stick to a core thesis, develop a rigorous narrative, and that's what I like to do. I have picked a narrative that I think is most likely to play out. And by doing so, I'm able to restrict myself from getting into positions that are not closely related to that narrative. And that's a fascinating reality, particularly because that means I'm not buying things that I necessarily want to buy. I can't own the things that I want to own. Do I own Maker? No. Do I own Link? No. Do I own Unibright? No. Am I upset about it and frustrated? Yes. Do I FOMO? Yes. Am I deviating from my investment thesis? Absolutely not. In fact, as things are currently, taking a look at my portfolio, I have no intention of doing anything other than allocating yield and gains to diversified positions to protect the gains that have been achieved. My thesis is sound. You have to have conviction. Um, and this takes time to find what the best positions are to have conviction for. Lewis says, my phone ran out. My phone ran out battery. In case you answer my question, I missed it. Lewis, I got you. The answer to your question will it's not the best answer, but it is the answer. Will be here when you get back, my man. Cademy says, I have like four big coins and approximately 1% and about 15 smaller projects. Okay. You know, I can't argue with the 1% approach in a very broad basket, particularly because If something goes 1,000, if there's a new paradigm, then the 1% can become 10% of your portfolio. And that's interesting. So there's no perfect answer to how to structure and balance a portfolio. All there is experience, trying different approaches, uh, and hoping to be in the right place at the right time. You want to be in your investments before the market moves, letting the market come to you. Otherwise, if you're chasing the market, I almost assure you that does not work out well. If you're chasing the market, you need to be a technical analysis based trader. And then you could calculate or be strategic about your entries and exits. Investing is another story. I'm back, Velocity Bad. My man Lewis, is good to have you back. Kajal says full program later. No, it's not the entirety. This is not going to be. I have about 15 minutes left. I want to keep it a little bit shorter today. I want to get into shorter videos, but they'll be more consistent. Daily basis, ladies and gentlemen. Trying to buy Ren, and it keeps pumping. I don't have an answer for Ren, but I have a couple of things on my screen. So let's talk about some content. This is what you're buying right here. You're buying something that is way beyond its all-time high. You have to assess why you're buying it. You know what you're buying. Not why you're buying it, but why you're buying now. And it may be the case that it's a missed opportunity because you have to think the fundamentals of the project are overwhelmingly strong. And this could frankly be a new paradigm of technology. It's currently being priced as a new paradigm. It's in price discovery mode. Folks don't know what the price needs to be to account for what it does. But this chart, if you're looking at it from a technical analysis perspective, it's primed for retrace. This is on the weekly. It's overbought. It's way beyond all-time high, albeit there's no divergences, no bearish divergences. Look at the RSI and the MACD. It's just going through the roof. Obviously, on shorter time frames, we could take a peek on the 4 hour. MACD looks strong, and we could easily see this push another leg. I mean, look at that little pop back up on the RSI in the last 15, 20 minutes, half an hour. This could easily push back into overbought territory. But nothing stays overbought forever. There's going to be a pullback, and ultimately, given the strongest fundamentals of any project I could think of, um, with regard to the DeFi space, this will make higher lows and higher highs until the market realizes what the hell it is from a functional perspective. The potential is enormous. We got people joining. I got the stream, the live chat going crazy. Woo, good to see everyone. All the best from Norway. Yes, sir. Always a pleasure. We're going to have more fun. This is going to be a continuous daily thing. Trying to buy Rand, full program. I'm back. Velocity bad. Bye bye. Bye bye bye. Yeah, I think Ren is in bye-bye territory. Um, clearly, institutional investors have a capacity to assess such an investment from a yield perspective. They're purchasing this to produce how much yield, and then they're going to calculate how much yield over a given period of time. If you're making 10% yearly, that's a hell of an investment. If you're making 50% yearly, that's a no-brainer. But if you're investing in less than a dark node quantity, then you really, heck, it could keep appreciating as well. But it's hard. I wouldn't buy Ren now. Um, but bear in mind, if I was thinking from a venture capitalist perspective, why not? The 5, 10 year play, if crypto could take over good portions of the legacy system with regard to lending and borrowing, and frankly, with synthetics, options and derivatives and crazy trading, um, let's digress into synthetics for a second. So synthetics is doing the exact same thing Ren is doing. This is on the weekly. It's way above all-time high. MACD is just vertical. The RSI, yeah, it's overbought. I think synthetics falls into a category comparable to Ren. Obviously, a different fundamental technology, but it has the capacity to overwhelmingly disrupt legacy systems. We're talking about synthetic assets representing commodities, options, derivatives. There's inverse synthetic assets. Um, that is the New York Stock Exchange. The future of synthetics is synthetic tokenized representations of equities. It's decentralized. It's in smart contracts. There's no stopping this. The potential for synthetics is impressive, incredible, almost as exciting as Ren in many regards. Um, and there's a yield component to having synthetics as well, which is a topic unto itself. But suffice it to say, when these gains come, the point of this conversation is what do you do? So you have to further diversify. You have to take profits and move it into other, hopefully relatively stable assets. I mean, sure, if your profits are great enough, buy a small property, buy some gold, buy some silver, go into Bitcoin, but take it out of the increasingly volatile. This chart is volatile. It's going straight up. We want to see that, but we also want to take things out of volatile in general, whether it's volatile going up or down, it doesn't matter. We want to take things out of volatile assets and put them into other assets that are hopefully less volatile and have a better potential to maintain and grow value over long periods of time. And so many would argue that that's the case with Bitcoin. Um, my man Ryan, I'm very happy to provide these insights. I hope I could do more. It's all about time. Nairobi, yeah, that's what I'm talking about. This is a global community. Knowledge, power. This is not applicable to any particular country. This is applicable to every place on the planet. Anytime a person has value, it doesn't even matter if your value is collectibles or maybe you like to grow things and you have a farm. There's value there. So what do you do when that value appreciates? The same concept applies. That's what I love to talk about. I don't like to talk about just investing and purchasing things. I like to talk about broad philosophical concepts. And this is what it is with regard to value protection, value storage. Hey, maybe with profits, you buy a farm. Why not? But this is the type of thing that the ultra rich do. They buy companies. A farm is a type of company, obviously. So, obviously, a company is a type of diversification. How can one buy Ren from the US? A 1 inch exchange or Change Angel? That's it. There's no reason to go on a centralized exchange, and I know almost for a fact the reason you're saying that is because of Binance. There's absolutely no necessity at all to purchase anything on Binance. The vast majority of all the top projects, at least the DeFi projects, are all on 1 inch dot exchange. 1 inch dot exchange. And Change Angel is a non-custodial um, uh, transaction slash trading service. So between the two of them, you're going to handle a vast array of UTXO projects and obviously all the smart contract projects. And don't get me started on um, BlockDX and BlockNet. They're going to come out shooting. It's inevitable. Nothing's inevitable. Nothing's for certain with regard to a technology being adopted. But oh my God, the potential is so exciting. And I really think that they're on the threshold of something very impressive, uh, specifically considering it's from a UTXO perspective and not the status quo, which has become the DeFi smart contract perspective. Yeah, apparently Joe says he could get Ren an atomic wallet. Yeah, sounds cool to me. Whatever it is, I always advocate for using some sort of decentralized exchange or some sort of liquidity pool. Um, Centralized exchanges, sure. I mean, Bitrex has such a heck of a history, but it's such a burden nowadays to wait for a deposit, then trade and wait for a withdrawal. When the concept of one exchange, Kyber, Uniswap, and Balancer Labs, you are literally doing an exchange immediately, and nothing leaves your wallet. What a crazy reality. Your take on dollar milkshake theory? Well, no doubt, Brent Johnson is, I think, spot on in the long term, and most people agree. The logic is sound. Short term, the value of the dollar is going down, and the emerging markets and obviously, you know, the other global powers, they're strengthening. Um, and that makes sense considering what the Federal Reserve and the Treasury printed. So this is a big reason why I don't touch equities because I don't trust this shit. It's not obviously manipulated in countless regards, but I just don't trust it. There's no fundamentals that can be applied. And the milkshake theory is a perfect example. That's a wonderful, brilliant fundamental analysis of the way things should be working, but it's been manipulated with the Fed programs for that fundamental what should be, but it's not. And I cannot be involved with anything where fundamental analysis is not overwhelmingly applicable. I need to understand what's going on, and what's going on needs to translate to the potential future. And that's how I'm able to position myself now and let the future come to me. Fundamental analysis. I don't do technical analysis, drives me nuts. Um, yeah, countries need dollars for debt, then to stable coins, and finally into Bitcoin, Digibyte, and crypto. Sure, well, stable coins is a whole another fascinating topic considering any shortcomings in dollar availability in overwhelmingly inflating countries. Um, if you don't can't get dollars and you can get stable coins, that's a good deal. So what graphs do we have up? I showed you Ren, I showed you synthetics. Digibyte I got here. Digibyte long term is looks strong. I have full faith in holding a long term position. Um, the fundamental analysis that I've shared with everyone over the weeks, there's nothing that's going to change with it. It's the same fundamental analysis in many regards that's been the case for years. The protocol is what it is. The core of it, obviously, we've had some consensus algorithm swaps, but that doesn't overwhelm it. That has no impact on the analysis of the protocol itself, the difficulty adjustment, the block timing, and the fact that there's multiple algorithms. And that makes it a wonderful long-term position because this technology will find itself into a basket of UTXO projects that developers for companies are going to choose from when they need data, uh, data storage and asset management, record storage and asset management. That's my fundamental analysis, and that's the future that I see. So my position is firm with Digibyte. I have I have firm hands, so to speak. Long term, love it. Okay, so DeFi land. A couple of folks have asked, what is a hidden gem? I think so. Here's what's interesting about Kyber. Look at what has happened with Comp. Look what has happened with Balancer. The price appreciation of the tokens have been pure FOMO. It's been crazy. It's been going through the roof because they're governance tokens. They are incentivized. They're incentives to add liquidity to the pool. They are a reward and they're priced by the general public. When Balancer released BAL and Compound released Comp, they were not sold. They were not released for a price. There was no offering. They were given away, and the market set the price, which is so profoundly different to the way things played out with the ICO explosion, because they were sold, and that's an equity raise. And that's why the SEC was all over it. But these tokens, these governance tokens, are given away for zero, and the market is setting the price. It's a whole different paradigm, and I think uh, the agencies are going to have like a little twitch about what the hell that means and if there's anything they could do with it at all. And I don't think they can. It doesn't make sense. They're given away for free. It is not an equity raise. Very interesting. Um, so KNC, guess what? So comp is distributed as compensation, and BAL as well for adding liquidity to the pools. But there's an emission rate. They're being distributed. KNC is a governance token, or at least it will be with the next protocol upgrade. Um, with the next protocol upgrade, you'll be able to stake it to earn trading fee rewards, and um, that reduces supply when staking. So it's and that's going to be overwhelmingly deflationary, combined with the burn component of the portion of the transaction fee. So combine that with the fact that this is basically a full release of the Kyber governance token. That's crazy. Could you imagine getting 20,000 comp? You could get 20,000 KNC because it's currently available. At least that's what I'm thinking. I have no idea how it's going to play out. There's no guarantees, but I like KNC. I like Kyber. I like Uniswap. I like BAL. I like Curve. KNC is positioning themselves to be a focal point of liquidity pools. And I think that is a heck of approach, a heck of a technique and tactic. I think they're heading in the right direction. I find what they're doing quite fascinating. And the fact that their IGO, their governance token, has been already distributed, pre-distributed. Absolutely fascinating. There's no guarantees. There's no you should do this, you should do that. Everyone needs to make a judgment, achieve portfolio balance. Don't go all in, but never spread too thin. All those fancy catchphrases I've used over the weeks. Um, all right. Unless there's any questions, I thank everyone for joining me today. I know it may not have hit everyone's fancy of how to deal with what do you do when you go to the moon. So ask me some more questions. Let's revisit this topic. I know there's going to be thoughts and feedback, and I'm more than happy to tackle this topic again and again and again. It doesn't matter. We could always revisit any topic. Always a pleasure, Caterpie. Hit me up on Twitter, send me those tweets, and happy Wednesday. I'll see everybody tomorrow. Peace.